Hey, it's Soleil, and this is episode 228 of the Orange Pill Investor. And today I want to talk about grifters in the X options space. And I guess I'm talking about me. I guess I'm the grifter. so there's a couple of accounts that I follow. I see their content. Excellent options traders. Um, but apparently there's someone who is claiming like 6% returns a month and they're selling their service or whatever. And a couple of the other, you know, I guess options traders that considers themselves more realistic have been clowning on this person and posting about it. And of course, I've made tons of videos about targeting 1% a week, and and apparently that's completely unrealistic. And I kind of thought I was being a little bit conservative. Um, this is Coach Mac here. He deserves a follow. Even though I'm going to take issue with this post. He's an excellent options trader. I can't think of any strategy or anything that he's posted that I could really complain about too much. And he even posted something about poor man's covered calls, early exercise risk that I had never considered. And so the guy's got a lot of good stuff. He's definitely worth a follow if you're into options trading. However, take a look at this tweet. Um, if you start trading with 100 grand and you make a 1% a week, that's a 68% compounded annual return. That's important. I'll talk about this later. But in 20 years, compounded annually at 68%, you end up with 3.2 billion. And I'm going to double check that math. I probably should have double checked it before I started the video, but maybe it'll be fun to double check this in real time. Um, this doesn't really surprise me, but then he's saying, we can see how this is unrealistic, right? Well, I think in the old system that probably makes sense, and this guy's probably been at it for a while. He's been a very successful trader for a long time. But um and part of this is in my reply to this tweet, but Bitcoin has never existed before. So, it's kind of a meme at this point, like all your models will be broken and all of that stuff. But with Bitcoin, no one has ever really seen the volatility that Bitcoin can bring. And a lot of these tradfi investors are not orange pilled in the slightest. So, here's another guy, option selling with Christian. He also posted about it, and these guys obviously follow each other. But if you look at some of this guy's, some of the guys stuff this guy's talking about. Oh, I didn't mean to show this chick, but apparently this is the girl with her account's the one that they're complaining about, and apparently she sells her service. I think Coach Mac actually sells his service too, but um, I do respect that he's very conservative about his expectations. He is definitely not um, over promising, and that's kind of what I thought I was doing too. I was kind of trying to under promise and over deliver, but let me just scroll down here. See if I can find some of the stuff that he's talking about trading. Okay. INTC, is that Intel? But whatever. Qualcomm, NVDL, I think that's probably like the leveraged NVIDIA. Oh, so this is 2X QCOM. Or maybe he's just saying two contracts. Yeah, sorry. I thought this was I don't even know what those are, but if this is, let's just double check. INTC, QCOM, and NVDL. So INTC, yes, Intel, QCOM, yeah, Qualcomm, and what was the other one? NVDL. That's got to be a leveraged NVIDIA play, right? NVDL just sounds like that's what it should be. All right, double long NVIDIA. All right. I'm gonna change that to just regular Nvidia. Well, you know what? It'd be interesting to see what. You know what? Let's give him the benefit of the doubt. Let's check what he's talking about here. All right, 21 puts for September. He's got 10 of them. 21 puts for September 27th. And wait, when did he put this in? This was September 20th. So this was just on Friday. So he's selling weeklies. Okay. The 21 puts. And he sold them for 37 each. So that must mean that the price moved just since, yeah, so it's up. That makes sense. So the price is up how much since Friday? Okay, so he probably sold them when the price was 20.46, let's say, before the bounce. Anywhere in here from 20 to 21. Let's see what time he posted this. Posted it at 7. So no telling what time of day he sold these. But the point is, he sold weeklies. And he collected about, what, 1.5%, right? So if the price of the stock was 2021, he collected 1% would be 20 cents, and he collected 37. He collected almost 2% for the week. So even in that scenario, it's not, even, I don't know why they're saying that they're dogging on 1%, and this guy literally just collected. Now they do mention it's hard to do this long term, but also you gotta take advantage of good premium when you can get it. So, but this isn't a huge discount either. This is only like selling what, 5% below the money, below at the money. So if the price does go down to 15 on you, you would probably be a little bit screwed on this. But QCOM, let's see if you want to sell puts, at the money, you could get like 1.5%. Yeah, so you really can't get a whole lot of, what was this other one that he sold? He sold the 162.5s for 220. Okay, he's made half his money. He could close these, make 50% of his profit in one day, really, just because the price, I assume, has gone up since Friday. But how much did he collect? He collected 220. So that's, 1% of, if the price was around what was it on Friday? So that was the 20th. Price was 168. Yeah. 1% of that would be 17. Sorry, $1.70. He's collecting 220. So that's over 1% for the week. So, I mean, it sounds like this guy's literally collecting the kind of premiums that he's saying isn't possible. Now, like I said, they do have a caveats that, like, sometimes you can get 1% a week, but on average it's going to work out to, maybe a quarter or 0.5% a week. And even 0.5% a week, I think Coach Mack pointed out, it's still, 26% for the year. So it's still an insane return compared to the 10% you can get from ETFs or whatever. But let's see, for NVDL, got the 50 puts, $1.26 each. Sorry, and let me just make sure that I got all, these are all weeklies. Yeah, September 27th, September, okay, 50 puts. All right, so what kind of premium can we get in this leveraged, this 2x NVIDIA leverage? The 50 puts, god damn it, I keep forgetting how much. 126 each. So that's over 2%, which makes sense. You should get more premium in a leveraged ETF. You're getting double X leverage, so the volatility should be twice. But, this would be considered risky because with double leverage, I bet you this price is going to be all over the frickin' place. Yeah, so this is 30. A couple months later, it's 85. It's back down to 40. It's up to 60. So this thing, you can get whipsawed on this pretty easily. But by the same token, even on these, what I would consider rather boring stocks, the premium is not that great. And so apparently I'm grifting because I'm out here preaching 1% a week, but I could be out here preaching 4% a week. It's already Monday, so there's 1 day less premium here. But this is 3.5, 4% would you need $6 at the money. But so this is like 3%. This is 3% for the week. But I don't talk about 3%. I thought I was being conservative by saying, buy 100 shares and not, I have been selling some at the money covered calls lately, but that's not what I kind of started out preaching, and it's not what I recommend to people. Well, I can't give financial advice anyway, but I don't hype this kind of shit up without fully explaining the risk. Like, there's no upside here whatsoever. You're just collecting premium doing this. But 1% for the week, it goes out to 160. I wish there was a 162.5 here. That would have been closer to 1%. But this is like 1.25% for the week, and it's Monday, so it's missing a trading day. And there's still, what, $10 of callaway value built in here? So that's 2, 4, 6. That's like at least 6, 7% callaway value baked in here too. So there's even some upside. And this is not even this, and this is weeklies. Like, I can't get 45 days to expiration until tomorrow. That falls on Tuesdays. But if I take 1%, multiply it times 4 when I go out to these 45 days. So if I try to target a $6 premium, I could sell the 180 strike covered calls. Like, I don't even have to take these risky at the money ones. But 39 days to expiration, I can collect, what is this, 4%. And then on average, what you attempt to do is close this after 2 weeks and keep half. So that's why I say if you keep half in 2 weeks, then cut it by half again. That's what you would collect per week. So, $6 divided by 4 is $1.50, and that's about 1% a week. And let's just look and see if that's realistic. So if I sold this today at 39 days to expiration and I went back 2 weeks, what is the 180 strike going to be worth? The 180 strike is now worth 345. So couldn't really collect 1% a week on that one, right? Sold it for 650. Actually, yeah. Sold it for 650. You can buy it back 2 weeks later for 350. The difference is 300, and that's 300 in 2 weeks. So that's $1.50 in per week. That's 1% a week. And that's not even sacrificing all of the upside. Now, granted, if the price on MicroStrategy does race up to 180, then you're not going to be able to close this in 2 weeks. So that will interrupt the strategy. But I'm pretty sure you're not going to give a damn about not collecting your 1% a week when MicroStrategy has rocketed up 20%. Right? 10% is 150, 20% would be $30 per share. So you're going to collect the $30, you're going to collect 30% returns on the appreciation of the stock. Now, granted, that's going to take you 45 days, but 30% in 45 days is a nice, I don't even call it a consolation prize, but it's a nice little cherry on top, after collecting $600 on a $15,000 investment. I think I think this just might have to do with the fact that these people are used to trading boring stocks. Like when I first started selling options, I used to go out here to Market Chameleon. Can't be reached. All right, you're pissing me off. Apparently doesn't like me right now. I don't know what the hell's going on. But anyway, you go there, you sort by implied volatility. I would find all the high implied volatility stocks, and whatever had the highest implied volatility, I would go and check to see if they had very high options premiums correlated to those. So I was trading all kinds of risky shit. I mean, GameStop might have been the least risky thing that I was trading back in 2020. Um, you know, like car rental companies that were threatening bankruptcy and just all kinds of dumb shit. Anything that would just deliver a bunch of premium, I was trading it. And they are absolutely correct when they warn against, like, look, if you're chasing all of this premium, then you're probably dealing with some risky stocks. And so it doesn't surprise me, like, okay, look, I mean, Apple, you can't even get 1% at the money. So if you're trading Apple, okay, I can get with that. I got to 53 days to expiration. I can get 1% at 210. Oh, but I need to collect 4 times that. So I need to collect 8. Yeah, that's not happening. I would have to sell those at the money. That's just, and that's why I don't fucking trade Apple because the premiums are shit. So of course, um, and I do agree. They'll say, look, make sure you don't sell a put in something that you don't want to own, because if you get assigned, you want to own something that you think is going to go up in value. So I don't really begrudge people for selling puts in Apple if they want to own Apple to begin with. If I was dead set on owning Apple, I would I would absolutely sell puts in Apple, because if I like 225 as an entry price, why not sell the put, get paid 150 bucks, and now if I do get assigned at 225, my entry price is minus 150 to the fuck 223.50. um the subtraction was hurting my head a little bit there for a second. um so yeah, I would absolutely sell puts into Apple if I wanted to own Apple, but I don't want to own Apple. um let's look at the Bitcoin miners for a second. So CLSK, And so I think some of these tradfi guys would probably be like, no way. I don't, I don't want to look at the chart that looks like this. They can't really imagine what the fuck they would do with a chart that looked like this trying to sell covered calls and run the wheel. But this doesn't bother me at all. Trying to get 1% in a Bitcoin miner is like elementary. I can sell the 8.5 and get 1%. I can sell the at the money and get frickin' almost 3%. If I want to go out to 40 days, 39 days, I can get 4 times 1%. I can get 40 at the 7.5 strike. If I get assigned on this at 7.5, I've gotten like a 20% discount, right? Almost. And I'll be damned if I can't find a good covered call strike. Even if this drops down to 5, I'm still going to be able to sell a 7.5 strike 40 days from now, 60 days from now. So, I'm not even out here telling people, yeah, sell at the money, sell covered calls at the money. To me, 1% living in existing in a Bitcoin system where volatility is the rule and not the exception. I don't know if that explains everything, but they might say, "Oh no, this is risky. I can't imagine, risking, Bitcoin mining. That's like, I don't know, some kind of speculative investment. But if you're orange pilled, if you're laser eyed, if you're already a maxi, then these are safe. These are safe options. I'm more than happy to own CLSK in this small account. I mean, in my main account, I'm trading MicroStrategy is like 90% my portfolio. And I consider it a volatility risk, but I don't consider it a quality risk. There's a big difference there, I think. And it's not freaking, what was I trading? I think I was trading like Hertz or something in 2020. And I was like, man, why are the premiums so good? And why is it only a dollar a share? And it was like, oh, maybe I should have checked the news first because they're in like bankruptcy talks. Um, so I did a lot of dumb shit back then, but even now, I think that I'm trading fairly responsibly, like with Tesla. I sold at the money covered call last week. That's, I collected like what, 3% or something close to it. I didn't have to get that aggressive. And that's generally not what I preach in the videos. I try to talk about the trade-offs and be realistic with it. But yeah, that's my explanation why I I kind of took exception to a couple of these posts. Like this one, this is another like a follow up. He's outlining what are reasonable expectations, and you can see that his max expectation is like 1% a week. And then he does clarify later that the ranges are pretty big, and that 1% a week should be at the high end. Like occasionally you might get lucky and get 1% a week, and but on average it's probably going to be closer to like 0.5% a week or something. But this is just this is in the old system. All of this stuff is lessons learned pre-Bitcoin. So Anyway, I guess it reminded me a little bit of the insurance commercial, you know, watch out for mayhem like me. Maybe that'll be my new catchphrase. Watch out for grifters like me. And the other thing that that I will say, I suppose, in my defense, and some people probably be like, "Look, you don't have to defend yourself." Um, you know, maybe it even looks bad if you try to explain, you know, or defend yourself against accusations or whatever. But I literally put every single trade in the videos. You know, one guy said, "Oh yeah, these people cherry pick and they only tell you about the wins. They never tell you about the losses." And if you've watched any number of my videos, I'm constantly talking about the risks and, you know, the losses or the upside that I missed out on, or, you know, and they clowned these you know, 100 to $100,000 challenges and stuff like that too. I mean, I had mine. I have my 5K challenge, which, hey, it's up. It's up almost 10%. It's taken me 6 months to get it, but I've documented this the whole time. So in March, this damn thing was worth $5,000 when I started it, right about here. And within a few weeks or a month, I had lost 20, 40, 20%, 40%, I think. What, 10%? Yeah, 20% of $5,000 would be 1,000. This was down $2,000. Yeah, so this damn account was down 40%. And I documented every single trade in here. There's no cherry picking. Every Friday, I frickin' roll. And if I do make a trade outside of, you know, when I'm recording the videos, I'll post a screenshot of it because I almost kind of feel a little guilty, and I don't want any of these accusations to ever be made. There was a really good documentary kind of expose, I suppose it was, CoffeeZilla. He did one where he was exposing these guys that sell these courses, and they'll, you know, promise you all these returns, and all they do is just collect your money, and none of their fucking strategies work. And he found this one guy, I can't remember exactly, but his handle is like real real ROI, or true ROI. Anyway, but his whole shtick is he always posts his actual returns, like how much he's actually making. And he's like one of the legit traders out there. Could probably find that YouTube video if you search for CoffeeZilla and options or courses or something. I don't know. If I can find it, I'll put it in the comments. But that kind of inspired me. So that's why I wanted all my trades to be in the videos. I wanted it all documented. I wanted all the wins, all the losses, just out there in front of everybody. And you know, nobody can say I'm cherry picking. Um, and I don't like bad trades, but I almost wear the bad trades as a badge of honor, you know, just to prove that I'm not fucking around here. Like, I'm not trying to blow smoke up anybody's ass. Uh, so anyway, I think that's about it. Yeah, I took issue to this, but this he's a really good trader, and he's worth a follow if you want good advice on trading. And you know, maybe he's right. Maybe you should you should absolutely take these claims with a grain of salt. Um, and anybody claiming to be able to do this stuff, you should be able to just, well, I guess they're going to make you buy their courses before you can verify them. But I mean, the premiums are out there, even on the boring stocks that the one guy was talking about. You can get 1%. So I don't really see what what all the hubbub's about. Now I will say this though. When I say 1%, I'm only talking about 1% on a stock's current value, because when CleanSpark is 7, you're going to get 1%, so you're only going to get $7. If CleanSpark is $23 a share, 1% is going to be 23 cents a week. And if you bought in here at 23 and you rode it all the way down to 9, that's going to suck, because your account has dropped in value in half, but you can still get 1% returns on your on your portfolio that is now cut in half. So, but that happens to anybody who buys stock. If you buy stock and the fucking price goes down, your portfolio is going down. But if you're selling calls all the way down, at least you're down less. So even in that scenario, I don't really know if I can really. I'm really trying to steel man their case as best I can as well, and try to give them the benefit of the doubt. Like, maybe they're right if I look at it in this particular way. Like, if you're investing in something, then it goes to hell. But like, yeah, I mean, don't invest in shit companies. I used to sell options in Nikola, which the fucking CEO went, I think he got found guilty of like fraud and all kinds of crap. So if you're if you're involved in shady companies just because the premium is high, you should expect to get wrecked. But as a rabid Bitcoiner, I am not really worried about, Bitcoin miners, MicroStrategy, even Tesla. They hold Bitcoin, but I wouldn't consider them necessarily a Bitcoin company. But they've got a lot of good things going for them too. So I consider those good companies that I don't mind owning for 5 years, 10 years, 20 years. All right. I think that's everything that I wanted to talk about today. So, watch out for mayhem like me, and be good, y'all.